Hello everyone, myself Nasir Hassan. I am an assistant professor at TMIMT Tirthankar Mahavir University, Moradabad. In the previous sessions, we were discussing about various techniques of material control, like economic order quantity. We did an elaborative study combining both practical and numerical aspects on economic order quantity. Moving on further, let us discuss about the pricing of material issued. Pricing of material issued has basically three techniques: LIFO, FIFO, and HIFO. But here we are concerned about first we will discuss about LIFO method. LIFO approach. The acronym LIFO refers to the last in first out technique of inventory valuation. The newest products added to an inventory are the first to be sold at the beginning of an accounting year. As per the basic tenets of LIFO, it could be a very challenging to understand the accounting approach of LIFO. For example, almost a year ago, a firm bought 100 grinders of rupees 10 each. A week ago, the same firm bought grinders of rupees 15 each. Now, it makes sense the company owner will start to sell the grinders which he has bought for rupees 15 each in the last week only. He can accomplish this via the LIFO accounting approach. With the use of LIFO, the business owner can compute the remaining stock at a reduced quantity when it comes to time to calculate the inventory for tax purpose. The inventory's existence of items with abnormally high price is the primary cause of this. That means you will be paying a lot of taxes overall. Since the LIFO approach is only allowed in United States of America, one can apply it there. But because of certain ramifications and limitation of taxes, this approach is not widespread in India. There are certain advantages and disadvantages which are associated with LIFO approach. Let us study them one by one. First, advantages. First is easy method. As regards calculation, LIFO is supposed to be a very easy method. Next is issue price near to market price. The issued material, as the issue price remains almost equal to the market price, the cost price of the product or job can be easily known. Next is issue at purchase price. The issued material are valued at purchase price. Hence, the cost is correctly determined and there is no loss or no profit. Suitable if prices are increasing. If prices of material are increasing, then as regard to FIFO approach, this method shows less profit and thus result in savings of tax. Next is disadvantages of LIFO approach. Valuation of closing stock. The closing stock is priced at a very old price, which may not show the correct position of the business. Next is less practical. This method is not practical because in practice, the material which is purchased first is issued first. Problems of storing. Much space is needed for separately storing the material purchased at different prices. Variation in prices. The pricing of material issued on the same date may vary if we are going for a LIFO approach. Next is suitability of LIFO method. This method is suitable in times of rising prices because product cost will tend to be more realistic since material cost is charged at most recent market prices. As we know, material purchase last is issued first. So this method of LIFO approach is very suitable in case of rising prices. Moreover, this method shows the conservative profit figure by valuation of a stock at value before price rise and provides a hedge against inflation. Next is impacts of LIFO method. Impact on cost of production. As the prices of the latest purchase material are used for the pricing of issue of material, the issue price will be at more recent current market price. Consequently, cost of production will tend to be more realistic. Next is impact on inventory valuation. As the closing stock we already have discussed is valued at earlier rates in case of LIFO method, the valuation does not reflect the current market price. Next is impact on profit. The overall profit is not affected because the difference in issue price is compensated by the price adopted for valuation of stock. However, profit of a particular product or a job may be affected due to different rates of material to different products. In case of rising prices, this method results in a reduced margin of profit, resulting in reduction in tax liability. Now, to understand LIFO approach, either we have already done some theoretical aspect on LIFO approach. Now, to understand it from practical point of view, it's necessary that we solve up some practical problems. So let's start. The question says, with the help of a particulars, prepare stores account showing issue of materials on the basis of last in first out. You can see in this column, we have been shown purchases, and regarding purchases, details regarding date, quantity and price per unit is given. Similarly, we have been given issues, date and quantity and the quantity which is being issued is given. Now, before taking a problem, we need to have certain format. For preparing the format of LIFO account, we need to have 3 columns, and 3 columns need to be prepared or shown in the given manner. First, write store ledger account, bracket में write the LIFO method or whatever method you are following. Then write date, receipts, issues and balance. Receipts will be noted in the form of kilogram, that is units, rate and amount. Similarly, issues will be noted in kilogram, rate and amount. Balance will be noted as per kilogram, rate and amount. Now let's start with the question. First of all, write down date. We are preparing account for the year 2021. Next is, we will to make the recording of transactions easy, I recommend that you students should go by date. August 3, then August 18, then August 19, then August 25, then August 26, then August 28, 29 and 30. That will make the task more easy. Now, first of all, first transaction is done on August 3. August. So typing mistake is coming, no problem. We will write August 3. On August 3, the organization has purchased 750 kg of units at the rate of rupees 2, and the amount which comes is rupees 1500, which is 750 into 2. Next is issues. I think no issue has been done on August 3. So similarly, balance will remain same, that is 750 at the rate of rupees 2 and then 1500. Now, next transaction is done on August 18. It is done at the rate of rupees 350, 2.10. We will multiply 350 into 2.1 will give you 735. No issues has been done on this particular date. So the balance will remain as it is. Now for copying the balance in the next date, it's important first we look out the balance on the previous date. As on August 3, no issues have been done. The balance has been recorded 752 at the rate of rupees 2 and the amount is 1500. First of all, we will copy this balance, old balance, in the same format, kg, rate and amount. After that, we will copy the new balance on August 18, that is 350 at the rate of rupees 2.1 and it's coming 735. So on August 3, purchases were done at the rate of rupees 750, quantity at the rate of rupees 2, amount is 1500. No issues were done, so it's a blank over there. Balance was carried forward 750 as no issues were made. August 18, purchases were done, additional purchases were done of 350 kg at the rate of rupees 2.1. Now on August 18, first of all, we will copy the previous balance, then the new balance on August 18. Next transaction is for August 19. August 19, no purchases were done, only issues were done. Now, on August 18, we have to issue the material. There is a time now. It's a time now we look forward whether we are following LIFO approach or we are following FIFO approach. We are following LIFO approach. So material issued last will be issued first. Purchased last will be issued first. So last purchases were of 350 kg at the rate of rupees 2.1. So first we will issue 350 kg at the rate of rupees 2.1. Then amount will be 735. Next is we have to issue 850 kg. 350 we have already issued. Now we have to issue 500. So 500 will be issued from this balance, that is at the rate of rupees 2. So 500 into 2 will make up to 1000 rupees. So on August 19 we are done with the total of issues of 850 kg, 350 from the last purchases at the rate of rupees 2.1, 500 on next purchases, previous purchases at the rate of rupees 2. Now how much balance is left? After of 750 we have issued 500. The balance on August 19 is left for rupee of amount 250 kg. 250 kg at the rate of rupees 2. I think there is certain mistake. We need to shift this amount to this column. Okay, no problem. And this amount will be shifted to this column at the rate of rupees 2, which will make up 500. Next transaction is of August 25. On August 25, there were purchases of 600 kg at the rate of rupees 2.10. 600 into 2.10 gives you 1320. Now, as we have discussed, when we are copying the quantity, rate and amount in balance, first we will deal with the previous balance, that is 250, which was there on August 19. First we will carry forward this balance at the rate of rupees 2 and the amount is 500. And then we will carry forward this new balance. Next transaction is of August 26. On August 26, we don't have any purchases, but we have issues of 450 kg. So 450 kg, as we are following LIFO method, we will issue from latest purchases which are of 600 kg at the rate of rupees 2.1. So 450 at the rate of rupees 2.1. I think there is certain mistake. It is not 2.1, it is 2.2. Please rectify it. It is 2.2. Which makes up 450 into 2.2 will give you the figure of 990. Now next is balance. First of all, we will copy 250 as it is a remaining balance. Now next is 600 minus 450 will give you 150. Out of 600, we have already issued 450 kg at the rate of rupees 2.2. Remaining balance is of quantity is 150 kg at the rate of rupees 2.2, which will give you amount 330. 150 into 2.2 will give you 330. At August 26 transaction is closed now. After August 26, we have transaction at the date August 28. August 28. It is 500 at the rate of 2.30. Amount is 500 into 2.30 will give you 1150. Again, we will carry forward the balance. First, we will carry forward this balance, previous balance in a current date. Then we will carry forward the fresh purchases made on August 28. So on August 28, we have previous balance of 250 kg and 150 kg and a fresh balance of 500 kg at the rate of 2.3, which makes up to amount of rupees 1150. So it's very much important that whenever you must be very careful while writing down the balance. If you are correct in writing down the balances or carrying forward balances and noticing carefully, noticing the transaction date, you can never commit mistake in any kind of LIFO or FIFO accounting method. So be very careful with the dates and be very careful while writing the balance. Now next transaction is on August 29. On August 29, we don't have any purchases. We have issues of 510 kg. Now what we will do, first we will issue fresh purchases. As we are following LIFO method, we will issue the latest purchases. If we would have been following FIFO method, or definitely we would have done issues from these purchases. But as we are following LIFO method, we will do the issue from latest purchases, that is 500 kg into 2.3, 1150. 500 will be issued from this particular balance. Now remaining 10 will be issued from another latest purchases, second last purchases, because these are finished now. We have issued over here. These are finished. Now remaining 10, we have to issue 510. Remaining 10 we will issue from here. That is 10 at the rate of rupees 2.2, which makes up to 22 rupees. Now balance. Nothing has been issued from this balance, so we will write as it is. We have issued 10 units from 150, so remaining units will be 140 at the rate of rupees 2.2. Rate per unit will never change. It will be 308. Sorry, it will be 308. August 29 transaction is closed now. Next is August 30. There are no purchases, but there are issues of 150 kg. So 150 kg, we will issue 140 kg from here. We 140 kg from the latest purchases, and remaining 10 kg we will issue from the second last purchases. That is 10 into 2 makes up to rupees 20. Now after 250 we have issued 10. Remaining balance on August 30 is 240 multiplied by at the rate of rupees 2 per unit, which makes up to 480. So on August 30, we are left with a balance of 240 at the rate of rupees 2, which makes up to amount of 480. So this is a method of a LIFO approach. If you have not understood, again, I will explain it for your sake. We have to prepare issue of material on the basis of LIFO method. We have been given purchases, we have been given issues. Now, if you want to make your job easier, first of all, you have to be very careful about the dates. If you are going by dates and you're not missing any date, definitely your answer can never be wrong. We will make a format, receipts, issues, and balance. In each and every column, we are having kg, that is quantity, rate, and amount. Then in issues also, we have quantity, rate, and amount. Then in balance also, we have quantity, rate, and amount. Now, first of all, understood the transaction done on August 3. On August 3, we have purchases 750 kg of quantity at the rate of rupees 2 and amount is 1500. Now, in noting down the balance, there are no issues done. So balance will be again 750, 2 and 1500. On August 18, we have done a purchases of 350 kg at the rate of rupees 2.1 and amount is 735. So while we are writing the balance, it's important. On August 18, I am writing the balance, but for me, it's important to if any previous balance has to be carried forward. So in this case, on August 18, First of all, I will carry forward the balance of August 3. On August 3, then I will write down the balance of August 18, which has not been issued anywhere. This quantity has not been issued anywhere, so it will be noted down in as it is manner. So on August 18, I have previous balance of 750 and I have current balance of 350. On August 19, issues were done of 350 units. 350, sorry, on August 19, issues were done of 850 units. So first of all, I will finish up as it is a LIFO method. So material purchase last will be issued first. So my last purchases for August 19 were August 18. So first of all, I will issue these purchases. Then I will issue the remaining purchases, which I will take out from 750 units, 500. So total of 850 are issued. 350 I have taken from August 18 purchases and remaining 500 I have taken from August 3 purchases. Next is August 25, fresh issues were done, fresh purchases were done, and now I will take carry forward the balance of August 19, 250, and now the August 25 balance of 600 units. Next on 26, 450 kg was issued. 450 I will issue from fresh purchases which were done on August 25. Purchases of 600 were done on August 25. That's why I will, as it is a LIFO method, first I will issue the material quantity from the latest purchases, that is August 25. So out of 600 I have issued 450 units at the rate of rupees 2.2. Now I will note down the balance. First of all, I will note down the balance, that is previous balance 250 at the rate of rupees 2. Then out of 600 I have issued 450 on the August 26 date. So I will write 600 minus 450 will give you 150. Now for August 28, there were fresh purchases done of quantity of 500 at the rate of rupees 2.3. On August 28, first of all, I will note down these previous balances. Then I will note down these fresh purchases which have been done on August 28. Now on August 29, 510 kg of units were issued. On August 29, I will issue 500 from the latest purchases which were made on August 28, as I am following the LIFO method. Then remaining 10 I will issue from the second last purchases, that is 150 units. Now out of 150 I have issued 10 units. Now there are only 140 units remaining. Now next on August 30, 150 units were issued. First of all, 150 units were issued. Out of 150, 140 will be issued from these last purchases, that is 140 into 2.2, and the remaining 10 will be issued from the second last purchases, that is 250. Out of 250 I have issued 10 and 140 plus 10 or 150. Now my task of issuing 150 kg on 30th August has been done. So I have issued 150 kg on August 30. Now in my store 240 units are remaining. So this is how we go with the LIFO method. I think you have understood, and there is no if there is any problem, you can revert back to this numerical and understand the concept. Thank you for watching.